Good afternoon and welcome to the FP Markets Daily Market Update. And well, a bit of a mixed bag. Well, just one anomaly really, and that's the building two doors down the road, the ASX, coming in really strong. First day since Christmas that it's been open, and Australian market finishing a day up 1.21%. As you can see across the rest of the board, though, following the lead from Wall Street, seeing some negative numbers in the rest of Asia, and I suppose it makes a little bit of sense that it's the first day back for the ASX, so a little bit of catch up on what it missed out on over the last couple of days. But certainly the lead that we took from the US was a bit of a risk-off day. Once again, we can't reinforce this enough. The COVID-19 Omicron variant is really sort of the main and almost only news at the moment in the markets, and so we're going to get a little bit of volatility on the back of that, and it seems just to be swaying in the wind, so to speak, at the moment. And everyone, numbers are up, and that's the funny thing. Like today here, we topped 11,000, so almost doubled in the last few days here in Australia. And so, and as I've mentioned before, certainly the centre of Sydney, the CBD, is definitely looking very, very quiet compared to what it normally looks like at this time of the year. But markets sort of, ASX caught up, and as you can see here from some of the charts, I mean, this is the Nasdaq. We're still approaching those historic highs. As the S&P as well, and that will give us a bang on historic highs. So still markets charging ahead, and I think we had the dip on the expectation that we might see further lockdowns, but as we are seeing, and unfortunately the death rates and death toll has not been too bad so far, and hospitalizations have been a hell of a lot better than they were certainly with the Delta variant. So markets are taking that as a positive. A little bit of a correction, I think, over the last couple of sessions, and expect a little bit of this volatility as we move into the year end. Obviously, desks sort of fairly thin at the moment, and liquidity is fairly thin, and a little bit of profit taking is not to be unexpected, I suppose, while we move into year end and everyone starts to reassess their plans for 2022. So I'll just skip across to a few of the currency moves as well. And not surprisingly, we saw the dollar just not accelerate at all. That's probably the worst word. Just grind a little bit back, and in line with that sort of safe haven buying, stocks moving up, dollar getting a bit better bid. But as you can see here, not really affecting the Aussie too much. Very, very moribund trading conditions for the Aussie. Since we jumped above that 72, it does seem to be, we're seeing a little bit of trading, and that's providing a base over the last few days. Looking like it's sort of taken on a little bit of an uptrend, and that makes sense with obviously its nature as a commodity currency, and things looking much better on the stock front. Kiwi also a little bit boring as well, that same sort of pattern, like very tight ranges at the moment, not unexpected in this time of the year. Cable, we did get that good move off of cable. It did come up, really nicely from sub 132 levels, and we're up at like nearly 134.50 again. But once again, range bound conditions, and I think we're looking for that next catalyst to see where we're going. Obviously, you're starting to get FX traders, you start to get investment portfolio traders. They're starting to look at where we're going to go next year. Certainly, sterling's got a little bit of a boost from, I suppose, slightly better inflation numbers. Let's be honest, and that expectations translating through to the currency. So sterling's definitely had a little bit of a better move than some of the other currencies, and probably the best example is down here on that euro sterling chart. As you can see, entering a very interesting on the daily chart, hitting that sort of trend line where we are. It's respected at one time. These previous lows down here around 83.80. I think that could be the challenge for the bears and the bulls next time. So you'd see some bulls trying to pick some up around here if they think there's going to be a bit of a recovery in Europe. But certainly sterling looks to be in the ascendancy against a single currency at the moment. Similar pattern to what we've seen with the Aussie and the Kiwi in the euro. Looks quite nice on this longer term chart as well, just sort of gyrating above 112. We're trading around 113 at the moment. I think there's some options interest, and that's keeping it sort of relatively quiet, relatively range bound. Do always worry in these circumstances as we move through. It's Wednesday here. We've got a couple of sessions to go. New Year's Eve is Friday. Liquidity will become harder to come by as we enter those Friday sessions. I think even here in Asia we'll find it, certainly into London and that New York session, it could be a little bit whippy. You could start to see some nasty moves. In general, you'd be expecting to see it just remain range bound as long as we're not getting any horrendous news out, because there's nothing really in the tier one data pile to come through and really influence markets really for the whole week. So it's going to be on that news front, and obviously the news that we're all focusing on really is this spread of COVID-19 Omicron variant. I mean, just looking down, there's absolutely nothing. A whole host of bank holidays and public holidays this week, with Christmas falling on the weekend, and similar type thing with New Year's on the next weekend as well. So all of these things are adding up to pretty quiet range-bound conditions. But experienced traders will tell you that when you do get these conditions, you can get some really whippy, nasty moves. Everyone gets a little bit complacent. All it takes is one thing to hit the news wires, and bang, we're off to the races. So bear that in mind. There's probably going to be some decent trading opportunities that do come up. This is Swissy, and just to bring this up again, like one of my favourite charts over the last year or so, it's really respected this downside support trend line, as you can see here, a few times, and it is moving into a bit of a pennant formation as well. So I think, we're probably going to remain a little bit range bound until the new year, but that is one currency that can fly, and when it does move, it can go very hard. So some trading opportunities coming up there in the Swissy. Just skipping over to my sort of mix and match, Bitcoin's taken a bit of a hit. Again, and once again, very hard to pick. Liquidity even more of a premium in the cryptocurrencies. So we got that breakthrough, that sort of resistance level that we had before. We can probably adjust this again now, and it's just dropped back down well sub $50,000 again. Oil continues to sort of rise off of, and this is in line with, I suppose, what has been really a positive week and a half on in terms of sentiment and on stock markets, and oil back above $75 a barrel there, and gold sitting comfortably mid-range on the hourlies and of course on the dailies. So studying that one, it does seem to be getting squeezed. It has traded this range really nicely through most of 2021. Pretty much 1900 done it on the top side, 1700 on the downside, and it is traded that on a fair few times. So keep an eye on gold. I think that could be one of the movers for 2022. Just skipping over, I'll move over to that 10-year US bond side of things. Has just dipped down, not surprisingly, over the last session or two, but holding up there nicely, 147.39. Keep an eye. I think we're going to start to see some moves on the, certainly the treasury yields. That is the barometer we're looking at. 2 years is starting to move a little bit higher as well. That's not surprising given the trajectory we're seeing and we're thinking we're going to see from the Fed. So a couple of other things moving on. One last thing just to bring up today. Keep an eye. I know I've brought it up several times, but trading the Turkish lira at the moment is certainly only for the brave. As you said, as I've said a few times before recently, and just keeping an eye, we saw massive depreciation all the way, sub 18, nearly up to $19. We're back down. We've bounced off of, like, interestingly enough, and I sort of mentioned it before, this Fibo projection that was like one of the only things you can throw on something when it's breaking to massive new levels. It's actually respected it fairly well. As you can see, it's sort of bounced nearly off that 100% move of the prior move. We're back up to 11.8, but it is very whippy. Liquidity is really hard to come by. If you're trading that, you've got to have some real punchy risk management plans on, and capital management as well, because it is doing percentages on a daily basis. So just a sort of word of warning to the wise, I suppose. But as we see at the moment, I think plenty of opportunities coming up. Certainly 2022 is going to be a very interesting year for the markets. We're expecting to see decent movement from central banks, and that is going to make the products move, and I think we're going to see volatility really pick up as well. So good luck trading today. If you need anything from us at FP Markets, please don't hesitate to give us a shout. Thanks very much, and we'll be back again tomorrow with only a couple of days left of 2021. Cheers.